Hi, I'm 𝘿𝘭𝘶𝘐𝑚urad, president of KPA Lawyers. We are an Ontario-based law firm that helps businesses that make over $50 million in revenue. And today, I'm going to help you learn how to save money when you start your business, because there's many different ways to start your business, and a lot of people think that you should just incorporate. You start your business, well, I have to make a corporation. But that's not entirely true. There are cheaper and more effective ways to start a business. And this video series is going to help you learn the differences between each one so you can choose the correct method to start your business. And you can always go from one business form to another. In this video, I'm going to talk about the sole proprietorship. The next video, partnerships. And only in the last will I get to corporations and whether it's appropriate for your business. In this first video, I'm going to talk about sole proprietorships. So what is a sole proprietorship? A sole proprietorship is when you just start your business. You don't need to register anything with the government necessarily. You don't really have to do anything. You just start. You could be making an app and generating money. You could be selling lemonade off the street. You just start your business, and it's you, and you have the full control over it. A sole proprietorship is not a separate legal entity or anything like that. You simply start your business. You are taxed as if you are making it like anything else, and you can technically offset it with expenses as well, and you can talk to your accountant about how to do that. What's important that a lot of people don't realize about sole proprietorships is that people think they have to incorporate because sole proprietorships, you will have unlimited liability. And corporations, you don't. But that's not entirely true. Sole proprietorships, yes, you are liable for anything that you do in your business. However, corporations, you could be personally liable as well in certain scenarios. For example, a director of a corporation can be personally liable for certain types of taxes that have not been paid. Also, if you incorporate and it's just you and you have no other employees or anything, and it's a very closely held corporation, you might still be personally liable as if you were a sole proprietorship, only you just spent more money incorporating your business. So a sole proprietorship, if you're just starting your business, might be the way to go. You start your business and you start moving along, and you don't necessarily have any corporate governance or anything like that. You just start your business. The only thing that you have to consider when you start your business as a sole proprietorship is, number one, the name. If you want to operate not under your own personal name, Joe Schmo, sole proprietor, and you want to actually have a name called Joe's Sandwiches, you need to actually register your name as a master business license. And people can help you do that, or you can go online, and I'm sure there are a lot of tools with which to help you. So that's one thing you have to consider. The other thing is, if you are a licensed individual, a lawyer, a doctor, a dentist, an engineer, your licensing regulatory body may enforce certain regulations on you that you have to make sure that you have when you begin practicing, like maintaining liability and insurance and so forth. Besides that, you can simply start your business. You can hire employees. You can go to a bank and get money. So a sole proprietorship might be the way to go when you're just starting your business. Besides the liability concerns, the other two cons of just doing a sole proprietorship would be what happens afterwards. When I say afterwards, I mean when you're looking to retire, when you're looking to transfer your business. These are when things get tricky. For example, if you're running a sole proprietorship and you pass away, it's over. The sole proprietorship is done. The business does not continue unless, of course, you've left it in your will to someone else. Similarly, if you want to sell your business, it's a little bit harder to sell your business when you're not selling ownership units of the business. It's very hard to sell yourself. Not to say it couldn't be done, but it's just a little bit trickier. And frankly, a lot of people, when it comes time to sell their business, they end up incorporating and then selling. But if you're just starting out your business, you don't necessarily have to call a lawyer to help you incorporate, and now you're maintaining minute books and filing taxes and doing all the wonderful things that we'll get to in the next video. Instead, you can just start your business, and as you start making some money and some profit, that's when you can seek counsel to determine whether one of the other business forms might be right for you at a particular moment in time. Thanks for watching. If you like this video, tune in next week, and I'll be talking about another form of business organization called the partnership.